So it looks like foreclosure activity is finally starting to get noticed by mainstream media and some of the players in the industry. So, welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy here, putting the realism back into real estate. Today is the 12th of June. Hope everyone's doing well. Okay, let's get into it right now. All right. Looks like the U.S. foreclosure activity sees spike in May 2023. This, of course, is a report that's put out by Adam Data Solutions. Interesting enough, they're basically saying that all the activity, so foreclosure activity as a whole, means notices, scheduled auctions, or bank repossessions, up 7% from a month ago and up 14% from a year ago. So, it's starting to happen. It's starting to sort of gain some traction, and it's just a matter of time. And the reason being, we had a moratorium, we had a slowdown on foreclosure activity, which is typically part of a normal real estate market. I mean, it's always been there, it will always be there, but the past couple of years it was slowed down, it was, controlled, it was essentially, like choked off, and that's what has made sort of a difference in where price points are at. So as these properties come back to the market, it's going to alleviate some of the pressure, just it has to sort of happen, and more have to take place here. So essentially, the recent increase in foreclosure filings nationwide indicates a trend that has been observed throughout the year, and expected to occur, of course. The upward trajectory suggests the possibility of continued heightened activity, with foreclosure completion seeing the largest monthly increase this year. So, of course, we need to have those to bring additional properties to the market and lower price properties to the market as well, too. So foreclosures do help to balance the market as part of everyday real estate here. So we always have the top states. So Illinois, Maryland, and New Jersey post the highest foreclosure rates. So, of course, the rates is X, one in every X number of housing units. So Illinois, number one, Maryland, number two, Jersey, number three, Florida, number four, and Ohio, number five for foreclosure rate for the month of May 2023. When they go down to from the state level to the metro level, populations with at least 200,000 people, we see Lakeland up there, Lakeland, Florida, Elkhart, Indiana, Cleveland, Ohio, Palm Bay, Florida, Ocala, Florida. So looks like Florida is starting to feel a bit of the pinch on some of the foreclosure filings. So yeah, Florida is a state that's still doing well with respect to real estate, but we have an enormous amount of the shadow inventory, the stuff going on behind the scenes that nobody really speaks about. So you can see that that's the dichotomy of the marketplace. Metros with 1 million population greater, you got Cleveland with the highest rate, Jacksonville next, Baltimore, Chicago, and Orlando. So again, now we're adding a couple more into, obviously with Cleveland, Baltimore, Chicago, those are pretty much givens. They've been that way for quite some time. Now we're adding in here, we've got Orlando and Jacksonville, the larger metros, topping up Florida. So there's certainly a lot of activity going on down here. Foreclosure starts. This is primarily what I'm concerned about. So foreclosure start is a foreclosure filing, either referred to as a notice of default or referred to in Latin as lis pendens, as notice of litigation. So we basically, that's up 4% from last month and 5% from a year ago. The foreclosure filings, I do find they run in about 3 cycles a year as well. So there's a period of time where we see a lot of filings and it kind of slows down. Then filings pick up again. So that does happen cyclically. States that had the greatest number of foreclosure starts are Florida, number one, California, number two, Texas, Illinois, and New York. So what are those top states? Well, those are probably your most populated states, of course. So you're going to see the most amount of foreclosures. But you can see that, at one month it'll be California leading the pack. 1 month it's Illinois. Now it's Florida. So, 2,900, foreclosure filings occurred in the month of May. Metro areas with greater than 1 million people have the greatest number of foreclosure starts. New York City, of course, New York, Chicago, Illinois, Houston, Texas, LA, and Philadelphia. So there you go. So obviously large population centers. So this stuff is what's going on in the foreclosure world. So one of the things too, so once the property goes through the foreclosure process, 2 things are going to happen. Okay, it's going to go to auction. Number one, it's either going to be purchased at the auction by a third-party bidder, or it's going to not be purchased and it falls back to the lender, and the lender then has them as it's called an REO, real estate owned. It's a bank-owned property. So completed foreclosures, REO in May, were up 38% from last month and up 41% from the year before. Obviously, places like Illinois, Michigan, Texas, Pennsylvania have a lot. Same with the big cities as well too, right? So those are obvious locations where there's tons of foreclosures, so nothing should surprise you there. So things are increasing in the foreclosure world, and that's just part of the natural progression of real estate. My kind of point to this video is the fact that, and you've known I've talked about this and lamented about this for quite some time, is that, when we talk about where the property market's headed, where's housing's headed, where values are headed, inventory, the whole bit, a lot of predictions going on, and people are, pontificating what's going to happen in the future, but no one really ever talks about the impact that these foreclosures are going to have. Now, when, because we're coming from a place of zero or virtually zero a couple of years ago, obviously as it increases, the increases will look substantial comparatively speaking, but the point is that they're coming, all right? And it's almost like, well, they're negligible back a couple of years ago, so they don't make any impact on the market, so there's nothing to talk about here. Well, now we're starting to see the media pick up on that. So obviously there's a Yahoo article there, home foreclosures are rising nationwide with Florida, California, and Texas in the lead. Same thing that was on NBC, NBC News. Obviously, May's data report spike in foreclosure activity. So, we're starting to see a little more interest now, whether that's because we've maxed out on housing articles and any newsworthy or noteworthy things to talk about. I don't know. Maybe we're tired of hearing about low inventory and tired of hearing about increase in interest rates, etc. But now we're starting to see a little bit more play. Again, not huge, but for me, I look at it going, every little bit's a sign. Okay, so now we're having some acknowledgement that there's foreclosures taking place, and it's actually increasing as the time goes on. Very interesting, though, of course, right? So that's kind of the scoop in that. And again, I always find this a little bit, it's a drag along, tag along type of thing. And folks, if you enjoy the information I provide to you, if you could do me the great favor and smash that subscribe button, I'd really appreciate that. So thank you. And those of you who say you're subscribers, and I do believe you, if you could please hit the subscribe button and do the bell notification, because as I always say, I lose subscribers on a daily basis. I just plateau for the past couple of years. So thank you very much. All right, as we go forward here, this is interesting. All right, so Redfin puts out an article the other day that investors pull out of the housing market was confirmed by Redfin. Purchases by investors plunged 49% year over year in Q1 in the metros that are tracked by Redfin. Now, Redfin's not in every metro, so they're obviously going to track where they're buying and selling houses, but you can, and so they're in the major metros pretty much, okay? So you can see that, if you go back to the chart here, we've got, starting on the left-hand side with, 2004, 5, 6, okay, we dropped down in what we saw was the housing crisis in trough, and we've slowly been coming out of it. Oh, there was a drop when there was COVID. Oh, big spike after COVID, little spike, and then now we're dropping exponentially. So we popped up, after the COVID spike exponentially, and then we're dropping exponentially as well too. So that's what Redfin's saying. So investor purchases have declined almost 50% year over year in Q1, tracked by Redfin. So interesting enough, now we look at the locations here. The biggest drops, which is huge, so Nassau County, New York, almost 68%, Atlanta 66%, Charlotte 66%, Phoenix 64%, Nashville 60%, Vegas 60%, Jacksonville 56%, Philly 56%, Tampa almost 55%, Orlando same thing, almost 55%. So basically these are the decreases in investor purchases in these metro locations. So obviously they're saying borrowing costs climbed even higher in May, meaning investors may pull back from the housing market further in the second quarter. So investor home purchases typically rise on a quarter-over-quarter basis in the spring, but we may see them fall flat or decline when second quarter data comes in. So the whole point to this is these are obviously major markets. These are major markets with population base, with real estate activity, with investor activity, with hedge fund or REIT activity. So this is actually kind of interesting to note. I always say that, and it's not me who coined this, but it's the feet on the street or the boots in the ground. They're the ones that actually see what's happening in the marketplace immediately because they're really working in real time. So if you're investors, and I mean, investors are all types, like the onesie twosies, the mom, pa, the small investor, all the way up to the hedge funds and the REITs. So if we're seeing a general pullback, wholesalers, large investor buyers, hedge funds, if we're seeing a general pullback, that means a couple of things. That means the margins aren't there. That's number one. So why continue to pay premium for property when you know you're going to have a problem trying to resell that, once you're done your fix and flip or whatever you're going to do with your property. It's number one. And number two, they know that the market's changing. So all these larger investor groups, I mean, they spend a ton of money on analytics and analysis. Probably got a lot of, brainiacs and scientific people who are working through numbers, and they're basically saying, hold back, don't deploy, keep your money. Time will come in the future when we can do this. So this is what's going on right now. So when the feet in the street in the market, they see it first. When they pull back, eventually retail picks up on that, and eventually it'll be talked about in mainstream media. So for us. So in other words, I'm telling you this now. We've already seen this. So investors are being very careful. I've seen the decrease in activity in our area for sure, the Tampa area. And I know now that when people are doing their projects, they're already factoring in, like say you purchase a property today, you want to do fix it and flip it and resell it down the road. Well, the average time frame, and again, I know people can do it faster, but the average time frame is about 180 days, so 6 months. So what people are doing, the investors are saying, okay, great, if we buy it today and here's our cost profile, what's our ARV, after repair value, going to be at the end when we sell it? Well, people you can actually figure that out based on comparables. But now what they're doing is they're discounting that 10-15% minimum because they know the market's sliding. So today's buy might be good and the potential is great, but 6 months down the road the market's going to change. It's going to further devalue, and that'll cause a problem on your profitability, on your margin. So that's already going on right now. So as I say, the feet in the street see it first. They react to it first. At some point in time, it'll get picked up by the retail market and mainstream media, et cetera. So that's what happened last housing crisis. This is exactly what happened. People slowed down. Wholesalers stopped wholesaling. I've seen a big slowdown in that. Price points are dropping. What you saw for X number of dollars last week, you're going to get a new e-blast today with a reduction in price on the wholesale level. So it does change, and it changes dynamically, and it changes almost on a daily or weekly basis. So that's what we have to deal with. So this is one more sign, one more precursor that our market is continuing to erode, and we're going to see some continued changes in the market, continued value declines. And as I always say, that's not even with, and foreclosures are manifesting now, are starting to pick up the pace. So that'll help to contribute to the slowdown or the depreciation of the asset out there. Okay, so just keep that in mind. But that's why I think it's important, is that now it's being spoken about, where before it's always about how much am I going to make, everything's great, double-digit appreciation, whatever. Going with the foreclosure market, obviously we see, and this is a small component of it, so as foreclosures increase, what gets dragged along or tagged along, obviously, is the zombie foreclosures. So yes, basically there's X number of houses are going to be vacant, and we're going to see an increase proportionally in the zombie stuff as well too. So essentially what it's saying here is that among the pre-foreclosure properties, over 8,700 sit as vacant zombie foreclosures, defined as pre-foreclosure properties abandoned by owners. So they haven't been foreclosed on yet. They're in the process. The owners have skedaddled, and the homes are sitting there vacant. So that's the opportunity. We can track the owners down. They've already divorced themselves mentally from the property. That's the opportunity here. So is up 7.5% from the previous quarter, and up 15.5% from this quarter last year. So essentially, the count of zombie properties has grown in each of the last 5 quarters, dating back to early 2022. So we do see a trend here. Again, zombie foreclosures will keep inching up as lenders pursue more delinquent homeowners across the country. But again, this is a small number. They say it's nothing but a dot on the radar screen. But to me, you know what? It's still a contributing factor. And quite frankly, I can drive, if I went out today and drove around specific areas, I know I could find a zombie property sitting around. All right. So again, it's up from the first quarter of 2023 and up, and year over year it is as well too. Basically, the number of zombie properties has grown quarterly in 29 states. So between 29 states, it's grown, and annually in 36 states. So there you have it, folks. So the zombie properties are there. They're great opportunities as well too. High level findings. I know it's a lot of stuff here. We're looking at, really locations. So, among smaller residential populations, 100,000, you got Wichita, Kansas, are increasing. Cedar Rapids, Iowa, Peoria, Illinois, Toledo, Ohio, Youngstown, Ohio, 500,000 and above residential properties. You got Cleveland increasing, Indianapolis, St. Louis, Baltimore, Pittsburgh. So, significant size things. I guess you could say, We got still lots of vacant stuff out there that's already been foreclosed on or vacant. Highest zombie foreclosure rates in the U.S. are Peoria County, Illinois, Broome County, which is Binghamton, New York, Baltimore County, Maryland, Lake County, Illinois, Marion County, Indianapolis. So again, we're seeing a lot of stuff happening in the marketplace. So what does that mean for us out there? Well, it means that there's real opportunities if we want to go and get them. So the foreclosure market's picking up. People are going to need help either buying, like selling their property if they have equity, or doing short sales or working through various projects. And eventually, if they don't do anything, they're going to go to auction, which means you've got an opportunity to buy at the auction, REO, things like that. So that's what's happening. So things are changing in the marketplace right now, which sort of leads me to sort of go to the next slide here, which basically is saying if this is something you're interested in, and I do a little soft selling here, but it is what it is. We got a bunch of stuff going on here. Top 10 ways to earn income and build wealth during the housing correction or crisis. So this is what's going on right now. The quicker you get in and quicker you learn, the better chance you will have at acquiring discounted property, because at some point in time later this year, more people are learning about this or wanting to know about this or wanting to participate in this environment, right? So whether it's foreclosure auctions or buying them afterwards, bank owned as REO, the short sale stuff, taking stuff subject to homeowner or condo association foreclosures, tax deed foreclosures, obviously the zombie foreclosures are out there. More people are passing away, lots of probate estate foreclosures, underinsured essentially, through natural disasters, flooding, hurricanes, fires, whatever, and surplus overage. If something does go to foreclosure and there's a positive amount over the bidding process, that's a homeowner opportunity. So that's a part of a niche industry as well too. So a lot of stuff going on in this whole realm that just works around foreclosure. So reach out to me. I can show you how to do it, get you some training, whatever you need to do, we could figure it out. So please reach out to me. This is where the market's headed. This is where the opportunities are. The masses will eventually get here. The masses, or the larger investors, will eventually get here and try to eat our lunch. So that's a scoop, everybody. So once again, thank you for the views, likes, and comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. And we look forward to speaking with you later on in the week. See ya.